All right, so we had a bit of a roller coaster session today. Markets were up, then down. What really matters is the close. The close was ugly. It was a low of day close, so continuation expected tomorrow. I think this is exactly the kind of day I was waiting for. Finally, a big, ugly, bearish engulfing candle kind of day. Obviously, there was news involved, but I think news is overhyped. I think it's an excuse sometimes for the chart to do what it was otherwise going to do, if I can get away with that. So there was several data points. There was the BOJ, the Bank of Japan, leaving their policy unchanged. There was some producer prices. There was quite a few sort of medium size data releases from the US, but ultimately, and yields had their move. Yields moved lower, and there was some Fed talk. But anyway, who cares? In the end, markets move lower. That's all that matters. Price action, the charts. So let's take a look at the S&P. Yesterday we had a sort of doji, sort of reversal signal. Now I've been looking for a reversal for some time, but we're getting very close to that more significant downtrend line, and that really is strong resistance. We did reverse just before that, so I like to see that. That's what I'm looking for. Another lower high at resistance, at the descending resistance, or preferably just before. And I'm looking for a move back down to this sort of trading range here, the lower end. And if we can break that, then if you zoom out, you're just seeing another lower high, albeit at a closer time period. The width between this peak and this peak here, is further out than these two, but that doesn't really matter. So, and you can see low of day close really, so it would have kept going lower had the market not finished early. So again, I expect continuation tomorrow. Let's see how the European session opens. It'll probably be lower because it's got a lot of catching up to do. So I already mentioned the DAX. I expect to go 14,500. Let's look at the Nasdaq. Same sort of thing. It's reversing just before the downtrend line, the larger downtrend line here. So it looks nice. Nice move lower expected. So let's see. Don't know how many days it'll take to get to the lower end. 6% can be done in 2-3 days. That's maybe asking a bit, but next week I think we can complete this move down. It's really about getting that reversal in, and I think quite a few people got scared out. I started to see some sort of aggressive selling and the old pattern, where everything goes lower. It's not just markets, it's metals, it's commodities. So Bitcoin was also moving in tandem with the Nasdaq. So it's good to see the Dow Jones, which was the weaker indice yesterday, that continued today. Again, it was weaker. That's got a lot of ground to cover on the way down, but again, it starts with little baby steps. This is a nice step. I think another day like this, and we can reach the bottom of the prior trading range. You can see a bit of a, you can see how it can form now, so another move lower tomorrow. Let's see. Obviously, tomorrow is Thursday, and then we'll have Friday. So as long as we can close the week towards the lower range, I'd be very satisfied, and then we can keep stepping lower. So again, a bit like the others, closing at low of day, Russell 2000, which was very strong. I was looking for a reversal. I said yesterday we might have it, plus it was out of resistance. And again, and I didn't mention this, but initially, and you can see here with the wick, markets were moving higher, I'll go over that too in the other markets. For example, gold. I did see gold testing its highs, and I was looking at it pre-market. I thought, no way, this is a bit too much here. And then you could see the reversal happen, which was I was very happy to see. So the VIX, destroyed indicator, but at least that went up today when the market's going down. So that's good to see. This has a long way up to go here. So I'm really looking for 26 ultimately, but when will that happen? I don't know, but I think we will see 26. And to be honest, if we see 26 with what I'm seeing in the markets, we'll probably see a move back in the 30s. So those are the general markets. Let's look at the rates. Rates had a bit of a move. Now, the 1 year basically didn't do too much sideways, stuck within this very tight range. until I see it trading at the very bottom end or the very higher end, I wouldn't really take too much note of it. But I mean, the yields did actually go lower across the board. So this one sort of going sideways, unchanged, is notable. The 2-year, you need to zoom out now, lower, right? So lowest close in a long time. It's looking like it wants to maybe keep grinding lower back to this ascending support. I think it's kind of lost this channel. So, and plus all the other yields also moved lower. So maybe a move lower to the ascending support. The 5-year has lost its ascending support. It's kind of not got any support anymore. So, I mean, I don't really think you can call 3.4 support here. So I think I move lower to 3.2. 3 is not even that much support. 2.8, I would, yeah, we'll see. I think 3.2 is in the cards, especially if you consider the 2-year needs to go lower now. The 10-year, that closed at support. So, you know, there's if it doesn't bounce immediately, that could also lose support and start drifting towards 3%. The 30-year, just like the 10-year, losing support, the ascending support here, which means it will very quickly go to 3.4 and maybe lower. I think they're all going to start dragging each other lower. So yields are basically losing support now. This is with the markets going lower, and this is what I mentioned in the last video, where we're used to seeing yields going up, markets going down, or markets going down because the yields are going up. But here, I don't know who's dragging who, but it looked, I mean, the markets are going lower, but yields are going lower too, which suggests some safety fear trade where, you know, money is taken out of stocks and thrown into bonds. And that could become a bit of a roller coaster in itself, where, I mean, yields go up, or let's say markets go down, people jump into bonds, but then the bonds become overpriced given where yields should be with the Fed raising rates still, even though they're going to stop raising rates. You know, February still be a rate increase of at least 25 basis points. I think most people can agree on. So, you know, how much lower can yields go until bonds are overpriced, let's say, and then, you know, people might want to start selling bonds because the yields drop too much. So bonds, yes, all that matters is chart price action, and I think they're going to go lower now, but I don't know how much lower they can go. But what's important is the fact that the markets are going lower, you know. So anyway, yields, you know, weak, looking like a bit more weakness can come. But in this case, you know, yields going down, but markets are going down too. So markets are still going down. Let's look at the dollar, which has also been trading like yields generally. Now, the dollar in this case is really trying to hold this support, this ascending support. And I wouldn't expect the market to be going down if the dollar is going down. So normally, you know, dollar's going up and market's going down. So I don't think the dollar trade will be the same as the yield trade if this is a new pattern, if you see what I mean. So I think the dollar will start to not follow yields insofar as the yields may be going down with the market going down, but I don't expect the dollar to be going down. I do expect the dollar to bounce here, and it looks like it's still trying to bounce. You can see again this week touching the ascending support. I mean, this is not just out of nowhere that this is finding support. It really is because of this ascending line, in my opinion. So yes, there's also this area here. So there's a bit of extra help here on this horizontal pattern. But for me, this is the correct zone to be suggesting support is present. And I think it's trying to curl. And I think now it's even more likely to start testing 103.5, maybe moving higher. Let's see, because, you know, you've also got some specific FXs in play, like US dollar, Japanese yen. You can see this big spike in the dollar, and then it came back down. So the DXY could have done much better. It's just this Bank of Japan policy trade. So there's still some news that's sort of interfering with the chart, which is normal. But I think generally speaking, we are going to be moving back up and then testing this descending line. So at least the DXY trade chart looks correct. The yields, though, are not following the DXY because, well, because I think it's a safety trade. I think a lot of people are going into bonds because the market's going lower. So that could be a new development, something to keep an eye on. The DXY yield difference. But anyway, DXY moving up. I think the case is still there for a bounce back up. Let's look at commodities. So, okay, copper, you can see that top coming in here, massive wick. I think copper is going to come lower. I think not just because the dollar will bounce. I think commodities, I'm not going to say commodities, metals are kind of due for a bit of a drop because they've moved up quite viciously. Now, copper tends to move with the market too. So the market also should come down. So I think copper is going to come down for those reasons, not just its own chart and because of metals, but also the general markets. Natural gas, this surprises me actually, is moving lower again. Now that's why when you buy a sort of range, so for me, I would have bought, whether it's 4, 3.5, I probably would have bought 4 actually. I would have left room. I don't know if I would have bought 3.5. I'm not in this, but let's just say between 3 and 4, I might have bought 2 times, and that's it. Now, I still think it's a buy. I still think you're going to see natural gas at 5, in a few months. But I would leave this if I'd already bought twice and see if it gets to 2.5 for the next buy. I sort of consider my buys area buys. I try and get the lowest price possible, but I would leave some room. You're not going to say, oh my God, it's a screaming buy at 3.5, so it's a screaming buy. It is a screaming buy, but you're not going to buy it each time because these things can take time to play out, and you've got to respect the possible ranges. It could move, like look at this here now. So where are we? 3.15. It can go all the way to, let's say, this area to 2.5, just below 25% move. So if you've bought already, just give it another 20%. It depends on your time horizon, how much money you've got. I don't know. It depends on a lot. It depends on the person, but just remember to give it some room, because if this thing's going to move, it's going to move a lot in both directions, especially on the upside now. So, but still, I'm surprised that natural gas moved down that much. So I was bullish here. I'd be even more bullish here. Oil, that I was also bullish at. You can see that rejected the breakout, bit of a fake breakout here. Let's see, maybe that's just with the dollar, with the markets. I mean, again, a bit like natural gas, if you've bought it already up here, already here, you're okay. You can leave it, let it play out. If it's going to go below 70, I don't know. Let's see how it moves with the market. If the market keeps going lower, which I hope, and oil moves lower, then great. Maybe you can get it even lower. So, but anyway, oil, lower fake breakout here, this descending line. Now let's look at gold and silver. That's gold, for example. You can see that wick up here. I remember looking at, basically it was a green candle at some point during the day, early on. And I was thinking, no way is it just going to reverse and keep going up. I mean, it looked quite strong at the time. And then after all the news and the market moves and the yields and et cetera, it started to move low. And now obviously it's closed. So it closed pretty bearishly, big tail, closed near low of day, but still above 1900. To me, it needs to come down lower, so I'm not going to change my stance. I still think 1880 is in the cards, and we could actually go much lower than that. I mean, let's see what we look like once we're at 1880, what the other influences are like. Let's see the dollar, let's see yields, let's see markets, etc. But I'm still up for an 1880 move. I think that's more in play today than it was yesterday, so very happy to see that. Very extended, so the bias is to the downside for sure. Silver, same thing. That a lot of rejection. We've been mentioning that almost every day up here. Yesterday was another sort of bearish day. Today, perfect continuation, close at low of day. It was weaker than gold. I think it was down 2%-ish, or almost 2%. We're pretty much at the bottom of the range. So that's what I was looking for. I think you can say we're almost there. I think today / tomorrow, Thursday, let's say, overnight. So at some point Thursday, we'll be here. If we close below, let's say below 23 would really do it. I don't think we'll close below 23, but then we've got a real chance of coming down here at 22, and that would be probably gold at 1880 or maybe lower. So then I've pretty got my first targets hit, and I have to see if I'm willing to buy the miners then, because again, it will depend what the markets look like. If the markets look like they've got a lot more downside and the miners are following the markets and the metals look like they have more downside, then I might start getting greedy and sort of not pulling the trigger on my first buys. Or I might just buy a very light amount and then look to buy heavy amounts lower. I know how emotions can take the better of me too, even if I'm pretty seasoned, and I sometimes leave good till cancel orders in to make sure my emotions don't override my sober decision. Sometimes my best trade is actually placed on a Sunday, after I've had a nice long think. I had sort of 2 or 3 cups of tea, and just without any emotion, without the market moving, I just place all my good till cancel buys and sells, and then during the week they get triggered without me sort of interfering, overriding them, canceling them, moving them up or down. But anyway, I think I know how to deal with that. Let's see. First, we need to hit these lower targets, but I think it's possible. I think silver definitely tomorrow could hit low 23s. Gold, I don't know about 1880 tomorrow, but maybe Friday, maybe Monday. So let's see. But it's looking good. It's looking like it will move back down. So for people like me who sold on the way up and who want to buy back, the opportunity looks available. Let's look at the miners, because that's where I actually do it. Here you can see perfect sort of reverse head and shoulders, whatever you want to call it. It looks good. One move lower, and I don't know how much of a percentage move lower that would be. 3.5%. That's definitely doable in one day. Definitely 2. So I think end of this week, I will have the opportunity to buy my first miners back. Very light buying, because I do expect some continuation. And let's see, we could have a real market crash coming, and that's what these other buys are for. So I'd be looking at GDX 30, nice psychological number. Prior resistance becomes support, and it's also this sort of ascending support. So that's why this target is there. Nothing else to talk about, because that's pretty clear. I've covered it elsewhere, and the chart is pretty accurate. Close at low of day, so really set up tomorrow, Thursday, for a GDX buy. GDXJ, exactly the same chart. For GDXJ, it'll be essentially 37.5-ish, and obviously below that if possible the next couple of days. I don't have to spend long repeating it. That's all there is to it. Bitcoin actually surprised me a little bit with the weakness it had. I thought it would outperform. I mean, it doesn't really surprise me that it's red today, because the Nasdaq is red, because everything is red. So Bitcoin has to follow. Plus, we hit resistance. So a healthy read. I'm not sure how much lower it can go. I think this target remains correct, actually. So if it does start to flush with the market, which is starting to pair itself up with the markets again, then I guess 18,000, 18,500 would be support if we start to flush. Yeah, I guess that would be it. Prior support here, which was resistance here, which is reclaimed here, will become once again support. So maybe just to make things a bit clearer, I can sort of, it's a real rough line, but something like this. You see what I mean? So come back, it might start finding support before. So people who are waiting around 18,500 might not get it. Maybe it goes down to 19,100 and then bounces up. So it might not be obvious until it really gets there. But I think that would be support for now. But yeah, it did. I was watching, Bitcoin very zoomed in with the Nasdaq, the S&P, and all the other charts, and let's just say, it started to follow the market. So again, it's already hit its resistance. It's had its fun. It's no longer independent. I think that lasted 2 or 3 days, and now, if the markets move lower, which I think they will, we can see Bitcoin move lower. So let's look for, 19,000. I'd move this up a little bit because it's showing a bit of strength. recently. And that's it really. Across the board, market stocks were really low. We've had a couple of those stocks that really moved up a lot the last couple of days. They were hit hard. You can see some big numbers here. Look at this Virgin Galactic, etc. These are the more risky speculative ones. They moved lower. There were a few that I'm holding that had big moves. Look at the Cryptominers, for example, big moves low, minus 15 to 20% moves. Makes sense because some of these stocks really moved a lot. So down they come. For example, I had a couple of stocks that moved much lower. Mind Medicine, that had some crazy moves up. So that came down after being up green initially. Oatly, which has been a short squeezing candidate for several days, that moved lower significantly. Even though it's down minus 4%, it was up sort of 15, so that's a big move lower. Hive, one of the crypto miners, big move lower. So for me, it was sort of the really speculative ones just really giving back a lot. So yeah, I'll leave it there. I'm not going to get into specific stocks or the portfolio. Just want to do a quick recap. So let's see if there's continuation tomorrow. I hope there is. I really do. Let's also pay attention on yields because that's starting to change. This time it's yields not up, but market down nonetheless. So that's probably the special one to watch. Otherwise, have a good evening.